it goes without mentioning that all our other sponsors in the different categories also deserve a big, big round of applause. Essentially, I would have been taking you through those lists. I'll be reading out those companies at a later point. But because we are pressed on time, allow me request for a volunteer. But this time, yesterday I tried the volunteer tactic. It didn't work out well. And my apologies. And I keep telling people that every day is a learning curve, so we continue to learn. Today, I don't want to take any risk. Can I request, because we are in the blue morning, can I request Sanlam to send me a representative to come and give us a standard opening prayer for our day 3. Keyword standard, the bold italics underlined. Because of what happened yesterday, I want to make sure we have no room for error. Can we clap for the Sanlam representative, the prayer warrior from Sanlam? If you notice that your neighbor is not here, give them a call, especially the one you were seated with yesterday. Give them a call. It is in the spirit of partnership and collaboration. The night could have been long. The Baganda say, Echiro kitwala omunaku. If you don't know Uganda, please tell someone to really tell you what that means. So call your neighbor and ask them where they are, to really, in the spirit of collaboration and togetherness, to move this sector. It is critical that your neighbor is here. Chairman Paul Mohammed, call your neighbor and find out the... Okay.
Thank you. Let's humble ourselves for a word of prayer. Heavenly Father, we thank you for bringing us to your presence this morning. We thank you that we had a beautiful night. We thank you for the sun. We thank you for the energy. We thank you that we woke up not by our own strength, but by your strength. We pray for today. We put it into your hands. Whatever we discuss, we put it into your hands, Heavenly Father. May you bless us, give us wisdom. Whatever we cannot control, we put it in your hands. We put it into your hands, Heavenly Father. And as we go by the day, may we be kind to one another. May we love one another. In your mighty name I pray. Amen.
I think there are 2 reasons that clap needs to be bigger. One is for the Almighty that we have prayed. Second, it is Sanlam. Sanlam, thank you very much. Firstly, for having the money to sponsor, but also, secondly, to have people that fear the Lord. Sometimes you may not find those 2 things in the same place, but it is good that we have found that in the same place. Sanlam has labored to share some quotations, and I don't want to take it for granted that all of you are reading these quotations, but I also take note that we have an online audience that is streaming live on YouTube. Wherever you are streaming from, whether on your phone, carry back our stress balls. Chances are low. Okay, the lip balm, did it? That one today is going to be highly used because of... allow me to read you this quote, adaptability. Adaptability is about the powerful difference between adapting to cope and adapting to win. 2 things there are critical that Sanlam is communicating. Adapting to cope and adapting to win. And all these statements are really to re-echo and to make sure that these are clear with our individual selves, but also our institutions. Can I request we put our hands together for our conference chair who has made her way here? Let's clap for Rita for coming. Rita, thank you very much. We had agreed, us who were in the room, apart from our regulator, in the next 5 minutes we're going to make a roll call of who is not here, and we look for you and find out if all is well. Ladies and gentlemen, without wasting time, allow me invite prayer from Emerald to come and introduce our first speaker for day 2 or day 3. Can we welcome her with some energy?
Good morning, ladies and gentlemen. Welcome to the third day of the 6th Annual IBAO Conference 2024, a gathering of innovative minds in the insurance industry. I am Priya Raval. I represent Emerald Insurance Brokers Limited. Although Emerald is new in the market, I, on the other hand, have been in the industry for the past 15 years. So I am basically an old wine in a new bottle. Thank you. Today, it is my distinct honor to introduce our keynote speaker, Mr. Protasio Sande, a distinguished figure whose contributions have shaped the landscape of insurance as we all know it to date. Mr. Sande brings a wealth of variously described experience, having served in different capacities, thereby spearheading groundbreaking initiatives which include cutting across economics, academics, insurance, purposeful research, but to mention a few. With a passion for a brighter insurance industry future, Mr. Protasio Sande has played a pivotal role in all the relevant spheres of Uganda's insurance industry. Having said the above, please be prepared to be enlightened by a visionary perspective that promises to drive our subsequent conference discussions, and I trust that such will inspire our event strategies 2024. Ladies and gentlemen, once again, please join me in welcoming Mr. Protasio Sande to the stage. Thank you.
Thank you very much, Priya, for that very generous introduction. Good morning, ladies and gentlemen. How are you today? I'm glad that you are fine. I had initially anticipated that we'd have the room a third full, but by the look of things, we are more than 50%. So that's a very good thing. Okay, thank you. Okay. I was asked to speak about a topic on emerging issues in the business environment and the role of insurance in the economy, or in the fostering economic development. And when I was reflecting on it, I realized that I need to be very careful to tell you about the things which I expect you to know. Because scanning through the audience, I see industry captains, business leaders, who on a daily interact with the business environment and make decisions based on signals from the business environment. Now, in fear of saying what you ought to know or what you know, I will not speak about the following, because I know for sure you do know them. I will not belabor to speak about demographics, the demographic shift as an emerging trend. And my colleagues who spoke yesterday highlighted it, that Uganda has one of the youngest population, and that has implications on your business. So I will not speak about that. I will not also tell you about the evolving threat of fraud in the insurance market. It is an emerging trend, but it has been talked about. Numbers are available. Our market is estimated to be losing over 10 billion shillings annually in fraud. And I know many of you are already up to speed with strategies to manage that. So I will not go into that. I will not speak about internet and what internet has done to your businesses. How internet has made it possible or has opened the doors to the world about what you do inside or behind closed doors. You overcharge me, I will compare and know that you've overcharged me. You don't pay claims, I will check, and I see your competitor is paying claims. So I will not belabor so much on that, because for sure you know that internet has imposed the demand for transparency in your operations, and you're already up to the task. I won't tell you about the effect of social media as an emerging trend, because I also want to anticipate that most of you already have policies and strategies to take advantage of the opportunities that social media presents, but also the threats that are associated with social media. Do I also have to tell you that GDP is not equal to total population? That's on a lighter note. I know you have seen this, that GDP is not equal to total population, but it is something else. I will for sure not also spend a lot of time telling you that insurance plays a very critical role in the development process. Now, you may be wondering, what am I going to speak about? I'm not going to speak about the what, but rather the how much. And in speaking about the how much, I'm not going to risk and give prescriptions. I want challenge reflections in this room. So by me highlighting how much do the emerging trends mean to businesses, and specifically the insurance industry, then we are able to acknowledge the seriousness that these emerging trends impose, and therefore reflect accordingly on what we can do together as a sector. Okay, that is an outline of what I will speak about in a few minutes. Then we shall spend more time reflecting with my colleagues from the region, giving this talk a regional face. When we talk about business environment, different authors have looked at business environment differently. You know, you'll bear with me. What brings food to my table is research. And I believe in highlighting what our predecessors have seen elsewhere. So business environment is about the external factors that affect your operations, that affect your performance on a daily, that affect your sustainability. But also business environment, according to Gary and Brad, it looks at opportunities and threats and what shapes these opportunities and threats in the environments that you operate in, to make informed decisions, formulate strategies to adapt to that changing environment. Now, the business environment is intertwined. We cannot speak about the economic environment without reflecting about the political environment. We can't speak about the political environment without reflecting about the cultural and the social environment. As we discuss here, some mind about growing the insurance industry, some people are also discussing on how best they can tap into the insurance industry to generate more government revenue. And I'm sure the discussions are happening even as we talk. So the environment is intertwined, and therefore we cannot look at one of the components in isolation. But also we need to reflect at the internal environment. The internal environment, our people. One of the speakers yesterday talked about human resource. They can influence so many things as we move into our businesses. I tried to break down the various components. Technology has been over-talked about. The competitive environment, we've talked about cooperating, but we can't do away with competition. Like I mentioned, I'm going to speak about how much threat or opportunities do these different components present to our businesses. So what the implications, that's where I promised I will spend a lot more time. Growing market competition is an emerging trend, a key one. What I have seen in our market here is that the cake seems to be fixed, and it has remained fixed for a long time. The cake is not growing. The size of the cake is not growing. In real terms, especially. But we are all competing for taking a bigger share of that seemingly stagnated cake. Now, the way out cannot be how best you can compete for that available cake. Statistics show, and I want to correct one of the statistics which was mentioned yesterday, that 1% or less of Ugandans are insured. The statistic which we have agreed upon together with the FinScope survey team is 5%. Of course, the difference between 1 and 5 is not significant, but at least 5 is more reasonable. This has raised from 3% in 2018. Now, people may wonder, but we have so many insurance policies. Those figures take care of the double, triple policies. I know Gav has about 6 policies, so we count him as 1, not 6. So 5%, the 95% is what we need to focus on. Now, the 5% is not for the children, it is for adult population, 16 years and above, according to the FinScope. So, with the growing market competition, we need to look at strengthening our individual organizations' competitive positioning. And my emphasis is not positioning for the existing cake, but probably for the other cake. It is usually a nice discussion when we say, why don't we make this cover compulsory? We usually receive those comments from the industry, and we try to drive that. But if I step out and I ask, why should we make insurance compulsory? Why can't people see value in insurance and buy it? And that's, like I mentioned, this is a moment of reflection. Again, we need to reflect more on how we position our organization's competitive strategies. One way could be through differentiation. Another way could be daring through research and development to go where other people have not gone. This will involve many other stakeholders. The shareholders will need to be involved because daring in these markets requires a long-term strategy with the demand for numbers. Top line. if the shareholders are not involved, then we are likely going to compete around the 5%, and growth will remain stagnant over the years. So 89% of the executives surveyed by Deloitte in 2017 identified and confirmed that need if we are to grow the insurance markets. The second emerging issue is that the regulator is becoming tougher, not just in Uganda, but across the board. Increasing regulatory scrutiny, and from different regulators for that matter. The other day, we attended one of the meetings of one of the stakeholder group in the insurance industry, and the issue of too much regulation was raised. And indeed, this is confirmed by a recent study, 2022, by PricewaterhouseCoopers, which found out that 63% of CEOs in East and Southern Africa are somewhat or extremely concerned about over-regulation. Alhaji yesterday in his opening remarks said that the regulator is very receptive, at least that he mentioned, meaning that we need to see how best we can balance between regulation and development of the market. Because if you have 63% of the CEOs in the East and Southern Africa of the insurance companies therein concerned about over-regulation, then it's an issue that cannot be neglected. It's an issue that cannot be neglected. Currently, the Insurance Regulatory Authority of Uganda is commissioning a study, and I think it was mentioned by Chairman Mohammed, on establishing the impact of regulation on the insurance sector. And it is expected that from the findings of that study, certain reviews can be made. Because if the sector is overregulated and does not grow, then even the regulator has nothing much to speak about. The numbers could appear nice, but when you compare these numbers with other markets, you feel like, or with other sectors, they don't sound too nice. So thinking outside, looking at our sector from outside is not very pleasant. From inside, very good. Because from 250 billion in 2010 to 1.6 trillion, very good. But if we compare with other sectors, which I will not mention here, one of the players could be equivalent to the sector. So if the issue is regulation, then, and I'm glad that he committed, we need to have candid discussions on what we need to review, what we need to adjust. And from this trend, it appears that more regulations are actually coming. Other regulators are going to impose other demands. But how best can we circumvent through that environment with extreme regulatory demands? The third trend which is emerging globally is the increasing dominance of e-commerce. Again, internet, coupled with the demographic shifts, coupled with enhanced access to mobile technology, has powered e-commerce. As seen from that statistic, 6.4 trillion globally in terms of sales will be generated by close of 2024 through e-commerce. Now, what does this mean? It means that we need to think about the business models. If you still have a company where everything involves me coming to you physically, talking and concluding a deal, and the relationship remains physical, then you are likely to miss out on that. Yes, my brother, not my brother actually, my senior mentor, Solomon. If I called him a brother, it would not be nice. My senior mentor, Solomon, will be very angry if I emphasized this point, because he has been very clear that with insurance, relationship is very critical. And I agree entirely. And I think the point was also emphasized yesterday. Relationship is very clear, but it has to be relationship plus. Back at home, we have a saying. There is I don't know if many of you know anthills. Anthills. Anthills, some ants come from anthills during particular seasons. They say when the direction of the ants changes, you also have to change the trapping point. So it is clear that the demands are changing, meaning that we also have to change certain things. E-commerce is the thing. I know many young people here make a lot of purchases online. Many. And there is a lot that can be done online. But again, this does not substitute the relationship management, given the special nature of insurance. 6.4 trillion shillings is not, no, those are dollars actually, is not a small figure. And we can tap into that. Growing population, and this is specific, it was raised by our keynote speaker yesterday. We are looking at FinScope 2023, where the insurance sector was very well represented, and probably you may need to get a report and look at it and get very important insights. The population is growing. Adult population in Uganda has grown from 18.6 million to 24.6 million in a span of 5 years, 2018-2023. But somebody would ordinarily expect that that comes with increasing market, that the market size has equally grown. During my introductory economics classes, I was told that one of the importance of having a big population is market. The risk, when you look at the composition of this market, of this population, we may not celebrate the numbers because there is a risk of dependence instead, increased dependency. 7 out of 10, that one was mentioned, that they live on deficit budget. So out of that increment, the 7.10 have to depend on you, who have some money. This is adult population. Don't think about the children to whom you have an obligation. 7 out of 10 adults are on deficit budget. Again, most Ugandans are vulnerable to economic and social shocks. 9 out of 10, and probably this is an opportunity, 9 out of 10 persons studied were faced by an unexpected event. Sickness, loss of a cow, crop failure, and all these are insurable things. But the problem is that they don't have money, or if they have little, small. So these are very important insights. 7 out of 10 Ugandans do not have a long-term financial plan. The life insurers can think through this space. With caution, of course, that these people don't aware that 7 out of 10 are living on deficit. And the number of Ugandans relying on their children for their future has reduced. So for some of us who expect that our children will look after us, the number has reduced from 20% in 2018 to 6% in 2023. That's a scare. Now, instead of the children looking after us in old age, we are going to look after them. And it's a reality. I know some of us here could be having adults who have even finished school, but they are still in our homes because of the broader macroeconomic environment. So that's why I was saying the population is growing, yes, but it appears the market is shrinking. So what lessons do we draw from this? I perhaps don't know, and that's why he mentioned that we need to deeply reflect and see whether we can take advantage of it, of this situation, to better our positioning in the market. Expanding digital connectivity. The survey shows that 72% of the population, the adult population, in 2023 owned a mobile phone. The number has grown from 52 in 2018. But out of those, internet connectivity is at 26%. So even as you think about riding or leveraging on the ownership of phones, the solution should take into consideration that only 26% have internet connectivity. But still, with the ordinary mobile phone capability, there are certain solutions that can be done. And we take advantage of the 72%. Again, in the spirit of integration and KYC, 76% of the adult population was established to have a national ID with a NIN, and you know the NIN is now connected with so many other things. So when you are thinking about integration, when you are thinking about the partners, the Uganda Registration Services Bureau becomes a very useful partner in terms of data, because we have 76% owning a national ID. SACCOs seem to be taking a dominant position in terms of savings. Where do people want to save? The number raised from 5% to 15%. For the banks, 11% to 15%. So SACCOs have caught up with the banks. And the question here that we need to ask ourselves is that what is it that is in SACCOs that we can borrow as a sector? Because there is something attractive there, as opposed to banks. If our models are closer to banks, we've seen how banks have grown. 4 percentage points. SACCOs, 10 percentage points. So this also means that SACCOs now become very important potential partners for our business. We can leverage on their models to reach the 95% that I talked about earlier. This one may not say much, but maybe we can also think about it, that the number of Ugandans keeping their money at home for certain reasons has also gone up from 27% to 44%. That many of you preferring to keep your money at home as opposed to keeping it in a financial institution or on a mobile phone. I don't know what we can learn from them, but it's a very unfortunate. It says a lot about the confidence of the population in the financial sector. Maybe it talks about the costs of access, the costs of maintaining that money, but there may also be an untold issue. The fact that Financial Intelligence Authority has become very hard these days, that you have to explain some money, especially if your account has never had good amounts and all of a sudden yeah. But many Ugandans are keeping their money at home. So if you insist that your premiums have to be paid through the bank, we may not, some of these people may not find it very attractive. Increased concern for environmental sustainability. Again, this was mentioned yesterday. A study by Nelson established that 66% of consumers are willing to pay more for products and services from companies committed to environmental sustainability. In your vision and mission statement, if you could find somewhere and you put environmentally sensitive, you're going to attract big clients. Yes, we are calling it a buzzword, but some companies are very committed to it. So my simple idea is that review your those things you put on your walls. Put one of your values is that for us we respect the environment. And on your website. How you do it could be another issue. But the point I'm trying to say here is that it is becoming an issue. Even if it may not be having a very serious bearing on the insurance industry, but the people we serve are saying it is important. 66% is not a small number. And therefore, we need to see how we incorporate ESG, for instance, in our underwriting considerations, so that environmentally sensitive projects, maybe you give a discount, and the others, you inbuild the cost accordingly. Or you support ESG projects through your corporate social investments programs, because it is becoming an important thing. Many people prefer calling it a buzzword, but it is real. It's becoming that important. The workforce dynamics, again, our sister from Strathmore did good justice to this, but 54% of office workers would like to continue working remotely, according to Gallup. Gallup is a consulting firm in HR. Their survey established that. Of course, this is coupled with the demographic shifts, the young people. Many companies nowadays have flex policies. You can report at 11 and leave at 9 p.m., or you come at 6 a.m. and leave at 3. Flexibility. So that people can give you their best. The 8 to 5 seems to be increasingly becoming counterproductive. And again, the traditional models would resist this, that you need some level of, standard. But if statistics are showing otherwise, then we have to reflect on our HR policies. The technological advancements, again, a study by Markets and Markets, 2023, very recent study, shows that global spending on digital technologies will surpass $3.4 trillion. The question would be when somebody looks, when you are presenting your budget to your boards, what budget are you allocating to digitization? It is very important. Because if the rest of the world is investing in digital transformation because of the advantages we have already highlighted, then your company cannot stay aside. Moreover, we are operating in a global village. So, in terms of strategy, what is your strategy on digitization? How much money are you putting aside to ensure that you make some processes seamless, fast, and efficient, so that you also take care of the e-commerce opportunities? Some important statistics. For now, very effective reflections as we sit here. Only about 3% of the population in sub-Saharan Africa has any form of insurance. Now, ours is slightly higher. That's an opportunity. It's not a threat. It's not bad news. It is good news. I hope we don't have some of the people belonging to the 95% here that do not have any form of insurance. I'm really hoping. Because if we have some, then we know that what we are doing is not a good thing. I always challenge my people at office. And for sure I know that some may not. Of course, I have not cross-checked with the industry to tell me to give a list and you say, who has a policy where? Of course, that's private information. Because now if you are working with a regulator and you don't have an insurance cover, is it awareness? Many of them are SCII and DIU, ANZIF. They even know the terms, the what, the whole cycle. If you are working in an insurance company and you don't have an insurance policy, don't you think what you're selling is... and you expect somebody who doesn't work in the insurance industry to understand and appreciate? And if you're an insurance executive in an office, chief operating officer, or CEO, the only insurance you have is medical offered by your company and maybe motor third party because you are fearing police. But from your salary, you don't get any money to buy any cover. Not even enhancing the MTP, upgrading the MTP to comprehensive. So I am just saying that I hope the 95%, we don't have anybody here as part of the 95%, including our media partners. Because if you come here to cover us, it means that you should have interest in the sector. So that's an opportunity, but there are some challenges. People don't have money. They have little money. People earn money differently. Some people earn seasonally, others annually. Some other people earn daily, small. Some of the 95% have had a bad experience before, and some others have heard from others, and hence they have taken it as their own experience. So that points towards how much we need to do. Serious, deep reflection. I know, again, my senior elder, Gary, yesterday said, evolution, yes, revolution, no. I think for me, again, some bit of revolution. Revolution including rethinking the definition of insurance, rethinking the standards. I think it was Gava yesterday who said that you give people MBs. Rethinking. So that we make this thing tangible. Because for me, I don't think my grandmother can understand insurance if it is not made tangible, that she can touch it and feel it. A promise is very hard to sell. A promise, especially when people don't trust us. And that one takes us the circles, the village saving groups, because those people are trusted in their own environments. But my brother Katerega here in his court, Yusuf is there. If he goes to sell insurance, he needs English with exclusions and warrants. It may be very hard. So there is an opportunity, but together here, I think one of these conferences should come up with a declaration. The 2024 Mbale Resort Hotel Ibao Conference Declaration. And it becomes law that we have resolved to do this. And once you resolve for us, as IRA, Marion will take note, and we shall monitor. Because fundamentally, we need to do something a little different. And together, it's not your role alone. It's a role of all the stakeholders. The second statistic for, again, more effective reflection is that less than 10% of the losses from natural disasters in Africa are covered by insurance. Less than 10%. Again, this shows that the potential is big. It also points towards the need for us to engage those that have a critical concern with disaster, government. Because if less than 10% are covered by an insurance cover, what is happening to the 90%? What impact does this 90% cause on the national development aspirations? That's where government becomes an inevitable stakeholder in our journey. The third important statistic is from the microinsurance market, the microinsurance network. Reports that the people covered by microinsurance in Africa increased from 78.4 million to 108 million in 2020. Now, there is some bit of willingness. The number shows some bit of willingness. But when we compare this with the population, again, it is very small. The penetration of microinsurance in Africa is actually about 0.3%. So, again, the potential is big. Then the other statistic to reflect on is on the data breaches. As we talk about digitization, there is a downside that we have to manage. We have to put in place mechanisms to mitigate the risks orchestrated by the cyber attacks and other cyber threats. And here, there are some scanty statistics in terms of numbers, for obvious reasons. Quantifying cyber risk, people do not want to commit on a particular figure. I mentioned about over 10 billion annually in Uganda, but that's an estimate. If you told each one of us to justify that and show how you calculated it, we may not. So the statistics on cyber are scanty, but IMF has confirmed that losses to financial institutions from cyber attacks could reach a few $100 billion a year. And we are financial institutions. So as you build your IT infrastructure, cybersecurity has to be behind your considerations. A few comments on the insurance and economy as I finish. We contribute, yes. Significantly, moreover. over 200 billion in taxes. So if you want to tell government that we are relevant, that's a good figure, especially now when all the debates are on revenue generation. Employment. Sylvia talked about 6,000 plus. Those are direct employments, but there are also indirect employments. We have service providers who depend on us. Those are additional employments. You people employ other people using the monies you generate from the sector. Those are indirect employments. Private sector credit and investments. Poverty reduction. A study by World Health Organization showed that approximately 100 million people are pushed into extreme poverty each year due to healthcare expenses. So if we have dealt with medical insurance, then we are preventing these people from falling back into the poverty. So we contribute towards the social stability of the economy. Risk mitigation, this is a standard. Access to finance. IFC is the investment arm of the World Bank. It estimates that 52% of the SMEs which we think are not bankable most of the times become bankable immediately they have insurance. So that, because their risk has become down, and therefore they become attractive to lenders, because the lender's risk has gone down. So that's again an area of partnership at a higher level. There are other standard arguments for insurance taught to us as ALA's senior forum, supporting trade. What I have done is to add numbers to that, stimulating investment and the long-term saving. So where should we focus as an end? One, fostering financial inclusion. We strive to create new markets. This is some form of summary. We strive to create new markets. If you can get a few people who have never insured, and you report that figure at the end of the year, we were able to penetrate this market. They had never insured. That would be a sign of success for the industry as a whole. But if you are going to pitch and get my client from me to your book, yes, as a company you have gained, but as an industry there is no value. You have picked from one pocket and you have put in the other pocket. It is an easier way, but may not be sustainable. The other one is hard, certainly. You need to invest. But it's more sustainable, and we shall celebrate as a sector when we say now that 40% of Ugandans have an insurance cover. We shall celebrate that statistic with a lot of pride. Risk management services. And this is where the brokers come through very strongly. You know, sometimes when you are discussing with those people up, the policymakers in the ministry, you say, so you people, you wait for the loss to happen, then you come through, you pay. You don't prevent. Because insurance has been posed as that when you suffer loss, that's what most of the agents say. When you suffer loss, we pay. Of course, there is the other question, what if I don't suffer loss? That's usually a very difficult question. But that should not be the focus. I think we should enhance the risk management service so that we don't appear to be doing post-mortem. And this is now a call to brokers. Yes, intermediation, getting clients, posting them is okay, but add. And we make that as our brand. That you see when you are with insurance, you may not suffer. Because even when you pay a claim, there are some inherent losses which may not fully be indemnified. So avoidance is better. Risk management would offer more value. So advice on safety measures advice on disaster preparedness, advice on risk assessment would be very critical for the insurers. The medical insurers taking through their clients' health tips, drills. It would be a good thing. And related services for the other insurance policies. There is benefit for both parties. Partnerships, again, very, very important. Government, NGOs, international organizations, circles, aggregators, all those are potential churches. Very, very potential collaborators in trying to reach those who have not bought insurance. Start simple ESG considerations. Simple. We are coming up with a framework. We have recently onboarded a consultant to give you some bit of guidance. No penalties this time round associated with the framework. It is really to guide you on what you can do, disclosure, simple things. Deliver on our promises so that we can be trusted more and rethink our value proposition. Like I mentioned, it should not be you suffer a loss, we pay you. It should be more than that. And when we say we pay, we pay. I just have one conclusion or takeaway. I wear two hats. One is from an outsider because I play a very effective role as an outsider because I joined insurance when I was an adult and having worked in different environments. But now also I have interacted with many of you and the people that you serve. Number one, what we are selling is very important. Number two, what we are selling is very difficult to sell. And what makes it difficult to sell is that it is complex. It is not tangible most of the times. People don't trust promises. Because also they have sometimes either heard directly, they have sometimes heard or experienced that sometimes you don't honor. That's a very common thing. They say, these insurers, when they are selling to you, they are very aggressive. But when it's time for a claim, I know, of course, for me, I appreciate why you have to do that in view of the fraud that we have also witnessed. But we have to rethink. So yeah, I've talked about engagement, deep engagement in honest, candid, soul-searching. If you don't have an insurance policy that you pay using your money, please, you put in your resignation tomorrow, Monday. Because you will feel very guilty telling people to buy what you don't believe in. So I said the solution is not going to come from outside. The enemy, just like the solution to our slow growth, could be our own selves. It is with us. Here. And we all know. We all know. So, that is my simple contribution to this discussion. I want to thank you for listening to me.
It is one thing being a regulator, but it is also another that they call you and you present something that makes us to reflect more. Can we give Director Sunday? Ladies and gentlemen, we can reflect, we can look, we can see, but to understand and implement is also another. And that's why these conferences are critical. Director Sunday, I want to quickly recap on 2 or 3 areas before we proceed, and also have our panel that is going to make a deep dive into what you have just shared. But before I have the panel, I'll do 2 things. One, to share a bit of comments. There's a part where you said that the parents that expect their children to take care of them, the number has dropped. It may be very, very good. But also the other curve to look at it, there is a common phrase on the internet that the young people keep posting. And it's in Uganda, and it says that abana twabavaako bakola bye baagala. So maybe also the parents just gave up on their children because they do not know what the children are up to. But I think it's a very good statistic. Now quickly, yesterday, starting with one of the comments that you ended with that says that when you suffer loss, we will pay. Yesterday we had a deeper conversation at lunch with one of the brokers, and the conversation was about agriculture insurance. And a group of people moved out of here and went and marketed agriculture insurance to a group of farmers. In one of those communities, there was one major farmer who was also the chairman of that community. The chairman was the only person that the entire community of farmers would believe in. So these insurers approached the chairman as the lead farmer, and the chairman bought into the conversation of agriculture insurance. Went back to his community, spoke to 200 farmers who all agreed and bought agriculture insurance. I think it deserves a big clap. The ending part is where we may not clap, but to reflect. But like you said, the people that were selling said, when you suffer loss, floods, drought, what, pests, war, we shall what? And indeed, the time came. When the time came, they called the insurers. In the beginning, the insurers, if they had agreed to come on Tuesday, on Monday they were calling to say, are we on for tomorrow? Now at the time for the claim, they called them week 1, they didn't show up. They called them week 2, they didn't show up. Week 3, they didn't show up. But remember that if I'm going to show you the garden where the loss has occurred, really results in the garden continue to change in week 1, week 2, and week 3. So the evidence will definitely change. So finally, the chairman who introduced the concept of agricultural insurance and made the entire village buy into the concept had to move from the village to the Kampala office to speak to the ones that said, this is your solution. When the chairman reached, this was a statement from the insurers. The insurers said that according to our satellite data, your entire village did not get a problem. Now, let's first assume all of us here are not insurers. Let us assume we are farmers. At the time of sailing, why didn't you show me the satellite that will tell me that it is raining here and all is well? Why is it at the time? I want to tell you that the chairman went back, and these are the very conversations. And if you're operating in a country like Uganda, where 68 or more are in the informal sector, that particular chairman has a lot of impact in that community. The chairman went back, and from this day henceforth, I want to tell you, you cannot cross with any insurance word anywhere. The moment you mention insurance, the conversation ends there in the entire village. But where did the problem start from? We shall pay. So I wanted us to really ponder about these conversations and really ask ourselves where we need to go. Quickly, I like to commend the UIA. And can I request that we clap for Chairman Latimer here? The last, and still through the conferences, still through the discussions between the brokers and the insurers and the underwriters, while I was at the UIA, when we were launching the conference, the CEO, Mr. John Anchisache, and I'm sure that the chairman, Mr. Latimer Mukasa, will agree with me, that they talked about, there is a general conversation, and I like that Director Sunday, you alluded to it, on financial inclusion. But behind financial inclusion is literacy. And so, from a financial sector perspective, financial literacy, Bank of Uganda, together with our financial sector players, are pushing for that. But the UIA is now pushing an agenda on insured literacy, which I think deserves a big, big round of applause, and I hope that they can really keep it up. Because I must say that if someone becomes literate financially, aspects of insurance will be very critical to them, but they'll also be able to appreciate what insurance has to offer. Quickly moving on, there are a number of aspects, but I'll end with one, Director, that you talked about, the push versus the pull factor. The push versus the pull factor. MTP, I am sure, brings in quite some huge amounts to the players, the underwriters that have that cover. But yet again, is it a push or pull factor? Today, if the regulation is withdrawn, will we be pulled to be able to buy motor third party? And yesterday, I gave a simple conversation from a customer perspective. Me who is buying the motor third party, what does it take for Jubilee Alliance? I'll give it because Paul is my friend. What does it take for Jubilee Alliance to tell me that thank you very much for buying this cover? We are now liable to any of the challenges you may get on the road. Something like that. What does it take? Because you'll find that on many occasions, the one who is buying the sticker, they will put the sticker and they will drive, and they will not know who their insurer is. But it starts with the small things. Yesterday, I still challenged insurers and asked them, if I have paid, I have, Director Sunday, okay, you said I have 6, not yet 6, 5, but you are close to the answer. I have 5, not yet 6, but I like the fact that the estimate was close. But I asked myself, what does it take for the insurer to send me all my money that I have paid, to tell me, Gava, you have so far paid this much. We are close to the goal. Today, young ladies and men have bottles that have, water labels. You are almost there. Keep drinking. But they are encouraging them to do things they know. But they will buy those bottles to keep drinking. So what does it take for the insurer just to send me a message that so far you have done 3 years. This is how much. If you keep up with the same spirit, this is where you will go. This is what we shall give you. What does it take? But all I receive is a message. We have successfully deducted your premium. That message, by the way, also never ends with thank you very much. It doesn't end with thank you. It ends and your number of the policy is. I don't think we're asking for too much. I don't think. But I think that this 6th conference really should set precedent where every insurer goes back. When we talk about big data and AI, I think people overthink big data. We are saying that this data that you have, just send us messages and appreciate us, get closer. The relationship Director Sunday talked about starts from the small things. My insurer knows me. I have been driving, and I will mention this. I have been driving for the last 12 years. No insurer by mistake has ever sent me a message, Gava, you're a motor third party, thank you for paying. But you could use this very motor third party that I've paid for about 75,000 to then also encourage me to say, but if you take on this cover, we shall also cover the people that will be in the car. We shall also cover your children. And because I am informed, I will take on a higher cover. But if you're not taking care of me, my father usually tells me, Gava, if you don't take care of the small coins, you will not be able to maintain the big monies. I'm not here to talk, I'm just the host. So let me stop there and quickly jump into the agenda. But I wanted to share customer perspective as a customer. Let me give you one final one that took off my hair from the head. So I am speaking to my wife about getting another cover for our child, but also save. Because of, the institution I serve has, done a bit of work on financial literacy. So I'm speaking to her, and this is what she tells me about a particular company. So we're debating about 2 insurers, who I'll still not mention, because they are here. But even when they were not here, you would tell them. So I mentioned company 1, and I mentioned company 2. Now on company 1, we have even now gotten an agent, and we have in conversations, we're going to have the meeting. So I tell my wife, follow up on that meeting. Then I mentioned company 2. Before the meeting of company 1, my wife comes back to me and says, no. We can't do that. Because Nakanja Costello, who works with this company, told me that even her, she doesn't understand that product. I hope there's no agent who is Nakanja Costello, because then I would have finished the game. But I said, what? Yeah. She said, she also doesn't understand that product. You better go for another one. She's also just selling. I think the people, there's what they call internal customers. We need to first give them on the food to test it, like Director Sunday said, before they sell the product. So we eventually now had to just move to company B, because for it really we had not had any comments. So quickly, I wanted to share a perspective from a customer side of the view, because even as the insurers, we need to make sure that we understand, appreciate, and be able to buy, because we've understood. The institution that I serve, I wanted to speak about ESG as my final comment. The institution really I serve, the Uganda Institute of Banking and Financial Services, in partnership with ABI, we are condensing the conversation of ESG. It's one thing to talk about ESG, but we're doing some work to do with capacity building for institutions across to make sure that they can tailor and domesticate these solutions across the entire processes and operations to understand and appreciate what ESG is all about, how to implement, and how to track. Speaking to the conference convener, of course, these are conversations we can have in collaborations, of course, with the training college, to make sure that we don't just continue to talk about ESG, but then we onboard it. And I like that Director Sunday, at the end of your presentation, you shared some of the areas, the low-hanging fruits that institutions can pick up on. Ladies and gentlemen, before we have 2-3 questions for Director Sunday, allow me mention that it is critical that we appreciate our sponsors, because all this would not be possible without our sponsors. Can I request Platinum sponsor Sanlam to stand up once again, and we appreciate them. I'm now also seeing some new faces. Because you are Platinum sponsors, now even some of your staff are coming in on any day as they wish. You have really eaten your money. Let's appreciate our gold sponsors in Prudential. We had a lovely night yesterday. I think it's critical. When I talk about Britam, I just need to tell Alan to stand up, and the rest will follow. Alan, please stand up, and then the rest will be able to follow. If you work with Britam, can we appreciate our silver sponsors? Thank you very much, Britam. Going to the Sapphire sponsors. We had a wonderful party, the welcome party, and I need us to appreciate the following. These ones will clap all at once because they are quite a number. We have UAP, we have Gold Star, we have Liberty, we have Uganda Insurance Association, and Jubilee Alliance. Can we put our hands together? Where is Gold Star? Where is staff of Gold Star? Please stand up, the staff of Gold Star. Okay. I think it's okay. Let's appreciate them. I don't want us to make a roll call of who is here and who is not. But Gold Star, yesterday I loved the game. You had a very interesting game at the exhibition. I hope it's still running so people can go there and win more gifts. So thank you very much, Gold Star. I really loved the game. I want to move to bronze sponsors. Allow me start with ICA Lion, the Insurance Training College, Africa Re, GA Insurance, GA, okay. Kenny Bright, they are saying that when you're looking for actuarial services, look no further. We have MUA, we have Waikari, we have Smart Applications, we have Jubilee, we have CAC Group, Continental Reinsurance, and Grand Re. Can we put our hands together to appreciate the bronze sponsors? In the copper sponsors, we have Willis Tower, we have Clarkson, we have Sky Reinsurance Brokers, we have Kenya Re, we have Pax, we have Fast Insurance, we have Zepri, we have Excel, we have Mash, Padre Pio, Uganda Re, and Minet. Can we show them love, ladies and gentlemen? Now that I have completed the sponsor moment, allow me to show you two individuals that operate in the technology space. And I think it's critical because technology is an enabler and an accelerator. Allow me once again show you Judy of Smart Applications. Judy, once again, I need to show you to the people until they adopt the solutions therein. Can we clap for Judy for being here? Judy of Smart Applications there. The staff, where are the staff of this organization? It's okay. Don't stand up, some of you. I don't want to create a roll call and you go back to office and it's hot. Let me show you once again Acme. Acme gave you a pack, and I'm sure that you can be able to pick on that pack and chew on it. Gorang, thank you very much for rising before I tell you to rise. It shows that you are ready to serve. That is Gorang. Can we put our hands together for Gorang? Like I said, they built a solution for brokers. About 5 of the brokers have already taken it up. He really took me through the solution, what it does at every level, in understanding the processes, in understanding the products, onboarding of the products, but also onboarding of all your entire data. And I think this is a system, whether you are going to buy or don't buy, go and take Jaribu. They call it Jaribu. Go and take sample and see how the system works. But make sure you use your technology players and see that they can support you in the best of ways. So thank you very much, Smart and Acme. CCare, our health partners. I don't know if they are here, but let's put our hands together. I don't know if we had any injuries. So far, do we have any? I don't think we've had. But let's clap for them for being available, because probably if they were not here, it could also could have been an issue. Quickly, ladies and gentlemen, before I invite now the panel. Solomon, first stand up. First stand up. People, can we appreciate Mr. Solomon Rubondo? Solomon, representing the people. The night would not be the same without you. So thank you very much for... Okay, after talking about Solomon, you have to talk about Shakira. Shakira. Shakira, they have unfinished business, but I will come. And you tell me how you made the full host of the event peak and earn no commission. Yet you know brokers, we survive on commission, and timely payment is critical. Ladies and gentlemen, do we have any questions for Director Sunday Protasio? We could pick 2-3 burning questions, and then we will move directly into the panel. Yeah, I'm being alerted that he has not received his plaque. We are going to thank him, but he has to first earn it. Can I request Aiva to help me move the microphone? Start from there, coming to the front. Question? Question? Yes, please, the name and the question.
My name is Donato Laboke. You insisted on question. I think you knew something.
No.
It's a question and a comment.
Okay.
To Sunday, especially for the area you are, market development, the thought, and I've shared this before, when we look at our industry, just like other sectors, you have to understand the consumer dynamics in relation to our offering. If you analyze the things we love the most, I'll talk about the beverages. There are those that have that other substance that changes your mood. And there are those that have that other substance that just makes you happy. The two have a similar factor. One takes you to heights, one just makes you mellow. And so the soda category and the beer category. If you look at those, they have products that are entry market products. The recruitment products that as a sector, out of competition, they've learned the consumer dynamics that you cannot start from the hard stuff. There are friends we have here, when we used to go out, they would take the brown bottle.
Yes.
But nowadays you meet them, the executives,
they are taking glasses.
GMs, they are saying, whiskey, I like it clear, I like it clear. But if you look at their journey, they started consuming something. There's that other thing that is light like milk, but they take it in the beginning. As they grow into the category, they take the hard stuff. It's not by coincidence. They've done research and understood how the consumer interacts with their product, and they compete in those categories. Now, borrowing from that, if you look at the soda category as well, we have Mirinda Fruity. If you recall when you are sick as a baby, you go to the clinics. I'm not talking about IHK. Go to the clinics. When they say the child is sick, you see them with the Mirinda Fruity. They give that one. For us, we give Splash, but the idea is Mirinda Fruity is what they take early. As you go on further, they go into the hard stuff like Pepsi and then the Evervest or tonic water. It is not coincidence. Now, borrowing from that, having experience in that sector, in the insurance area, the regulator and the players have to be deliberate about the consumer journey or the transition from when you start consuming. Which products do you start with? And it becomes intentional for us to ensure that when someone gets into the industry and has money to spend on insurance, what is the basic product that we must promote and ensure that every person that fits that profile is able to buy? To Mr. Sunday, it is a comment, but also a call to you to comment on that, because I believe it is not the insurers alone that can do this. But from a market development point of view, market entry, consumer transition to a mature, exposed consumer of a particular service, the regulator and the other bodies that govern have to play a part. Mr. Sunday, you will comment on that. I will take a comment. I'm not looking for a specific answer. But what are your thoughts on that? Thank you.
Allow me categorically state that the speaker that has just left the microphone works with Sanlam, and so I've allowed him speak longer. So for the rest of us, you may not have a lot of time to... Please move the microphone, the name and the question.
Thank you very much. Sunday, I am here this time round to praise you, not to attack you. Really, thank you very much for that extensive research and also sharing. Sunday, I was moved by your slide on effective reflections. It had two comments, 2 points, which to me are either contradictory or I don't understand them. But for purposes of reflection, you could help me analyze. On the second point, you said 7 out of 10 adults live on deficit budgets. Am I right?
Yes.
On the second last point, you said 80% of adults no longer depend on look to children for survival. Am I right? No longer look to children for survival. Am I right? I'm not right. What was the statement? Without taking you back to the slide.
The statement was that the number of people
Look, is reducing.
meaning that children are no longer supporting
Their parents.
What is then happening? If 7 out of 10 people are living on deficit budgets and don't have money for insurance, and for livelihood, they are reducing on dependency, what is happening? Is it crime increasing? Are people becoming thieves? Is government becoming benevolent? Or that statistic has a contradiction somewhere?
Okay.
Thank you.
Thank you very much, Solomon. Because I sit on that very committee where Sunday sits for FinScope and the Bank of Uganda, just to allude to what he said, in that very report, it is clear and evident that also individuals are borrowing more from individuals. It is clear in that report. When you read the deeper parts of that report in the FinScope, it has just been released by Bank of Uganda and FSDU. Individuals are borrowing between individuals, but that means that also the borrowing has increased, but also individuals are borrowing from SACCOs. So there is more of a family-to-family lending. Paul, my senior brother, Ninamo Itizibu, help me with $1 million, you get. But I'm not going to a financial institution. Me and Paul have a SACCO, governed Paul SACCO. We put it together, and then we start to lend people. So that sort of discussion is what is happening, especially at the informal sector. But I'm sure Sunday you can also be able to add some flesh to it. I gave that because we sit on that committee together, and I'm excited to be with him there. Yes, please.
Yes. Thank you, Sunday. I'm always a big admirer of Sunday for his research. Sunday, if you could take a pen and write very briefly 3 questions. 1.
3?
Yes.
Okay.
1. It's my firm belief that regulators are becoming very intrusive into the business of the regulated entities. And I want to know, where is that sweet spot of balance where you stop over-regulating and allow entities to operate freely and at the same time protect consumer interests? And where is Uganda in that journey? That may be a tough question for Sunday as a representative of the regulator, but I'd like to hear his views. Second question. The population is growing, but purchasing power is reducing. It means probably we have a very low-wage economy where people don't have much left after paying for their basics. How do we increase the purchasing power of our people so that they can then have some funds to buy insurance? Does that mean that we need to deliberate about a minimum wage? I'd like to hear Sunday's take on that. And then lastly, Sunday is recommending a blue ocean strategy where we go into new frontiers. And the regulator has been kind to create a regulatory sandbox where we can experiment with new ideas. Do we have any success stories from people who have taken advantage of the regulatory sandbox and launched a solution and it has been scaled? What are the learnings so far since that was launched? Thank you.
Thank you very much. On your second point, as the microphone is moving around, I saw some more hands. Yes, over there. I do not know if it's a question of purchasing power or it's a question of priority spending. When you're on social media, you will see people and their receipts in the bar and they're overwhelming. So I don't know if it's priority and or it's really purchasing. But let's move. The name and the question.
Thank you so much, Mr. Sandy. I'm Sharon from Smart Application, and I was really moved with your slide where we had 100 million people who are spending, pushed into the poverty lines because they're spending out-of-pocket expenditure. And you know, we have had very many discussions in regards to the NHIS, where we have the private sector, we have the public sector. So I expected in your way forward, you're going to have something about the NHIS. How is the private sector, the private insurance, tapping into the NHIS market? Because those are the people who can't pay the premiums, the 1 million. So how are we going to help them as the private insurers? Where are we at as the regulators of the private insurers? Thank you.
Sandy, that is yours alone. I can't really. Is that it? Okay. Yes, please.
Good morning, everyone.
Good morning.
Yes, Kasule is the name from AAR. I would basically need some kind of advice on what the industry thinks about what is happening in the market currently. You get to a point for us who are in the medical world where one of the brokers happens to have placed business with you, and you end up having very big loss ratios. Yeah, and the ideal thing for us to do is to basically just improve or increase on the premium. Yeah, and the best that we can do in the market is just move the client from the existing insurer to the next one, possibly who can give a much lower premium, which I believe is really hurting the what? Which I really believe is hurting the industry. How best do you think we can tackle this to educate the client that you've basically made a loss to this existing insurer, and the insurer needs to have some bit of profit, because it looks like we are basically a non-profit making industry. Thank you very much.
Thank you. You've reminded me something, which I think as the insurance players, we need to standardize and create uniformity. About, I think, a month ago, we went to the hospital, me and my family. And of course, me, I was not sick. It was my madam and the child. So me, I drove off. As I was going to, do my activities, play a bit of games here and there, my wife calls to say that company X has asked for a co-pay of 50,000 shillings. Now, I said, what? Because of course me, I had an idea of what co-pay is. I knew exactly what's happening. Then I said, okay, please pay. When I come, we shall discuss. But I want to tell you that last week, before that week, we went to the hospital and there was no co-pay. Now we are in the hospital, there is a co-pay. No insurer, but you have our telephone numbers, you people. You have our numbers. You wait for us to get into the hospital, make us look unorganized, ask for 50. What if we didn't have it? That's question number one. But then I asked my wife, are the other providers also co-paying the same amount or not? The people at the hospital will tell, no, it's only company A that is saying pay how much? 50,000. Now, for us from the consumption perspective, how are we going to now see the insurer? We're going to feel like maybe this company is asking for copay, we better leave it and then go to this one that is not asking for copay. I think at some point there's some sort of standardization and uniformity that's also required. I just wanted to share that from the medical perspective. But quickly, I think we have had enough questions. Let me now allow Director Sunday respond, and then have our panel to see how we can close the day for today.
Okay, thank you very much, colleagues, for the very good questions. Some of them are comments, but they will also make comments on comments. Beginning with Donato, I listened to you very well, and I do not disagree with you in any way. However, I wrote down one of the statements you made, that you cannot start from the hard stuff. You start from the soft stuff. I joined the insurance sector in 2012. The same problems which were talked about in 2012.
Thank you very much.
The same composition in terms of product. It is still Moto the biggest in the market. My question will be, when are we going to stop starting? That is really the question. Because we have always described the insurance industry in Uganda as a young industry. When is it going to grow? So in as much as we have to be deliberate in the direction that you ably explained, we also have to be deliberate in probably trying the hard stuff. And that's why he mentioned that this is a discussion between you, the executives, and your boards, and your shareholders. Because if we don't do that, even in 2030, we shall not be ready to start on the hard stuff. Even 2040. So we must be willing to make ourselves uncomfortable, sometimes burn the fingers, for the sake of moving forward. That is really my comment, but I entirely agree with the observation from the other sectors. To my senior mentor, Solomon, 7 out of 10 deficit budget are living on deficit budget, and so, oh, he has come back. Okay, sir. I was going to first pack it. And the number of people depending on their children is coming down. Our children are needing to support their parents. Actually, I see logic in these two, and a clear alignment. Maybe because children are no longer supporting their parents, could be the more reason why they are living on deficit. That they were being supported earlier. But now what they have to do, if you have not saved enough, you have to do what Gava talked about. You have to borrow. You have to ask friends if you have made friends. You know, it is certainly a very scaring statistic. It points towards the few of us who are privileged to work and earning money, trying to think about long-term financial planning. If you don't have a pension plan, probably you need to seriously reflect on it. Because in addition to your children not supporting you, you are going to support them. And if you don't support them, then they will kill you and they sell the property so that they can survive. There are some children who pray for their parents to die that avao, so that they can sell the property, and because your presence is not helping them. So long-term financial planning is the point. From my young brother, Ambrose, the first question he said is a very difficult one, and therefore risky to my job, about regulators becoming more intrusive in the business of insurance. I had actually mentioned this, and therefore it's not in any way risky. It's based on research. The 63% or so of the CEOs were already feeling the weight of over-regulation. And that's why he mentioned, and I was referring to my principal, who said that we are willing to talk. The unfortunate, these regulations, maybe even before he said the unfortunate bit, we need to note that most of these regulations are not local. They are not local to Uganda. Some of them are dictated by international standards. But the question or the issue that we have to address ourselves to is how do we comply but also survive? How do we make compliance affordable? I think that is the discussion that we have to take on between the sector and the industry. And I had already mentioned that we have commissioned a study on regulatory impact assessment. We have listened to you about the burden of regulation that you are carrying. And it is expected that the results of this study should be able to inform some reviews. And I want to call upon you that when you are asked on to participate, please participate. Because if you don't, then your voice will not be, it may not be felt or heard. Population is growing, but purchasing power is dropping. How do we increase the purchasing power? This is a national problem. I think Gobi would have answered this. Ramadan Gobi would have been in a better position to answer this, because this is a national concern, honestly. As insurers, yes, we have a role to play, especially from the point of view of making sure that those who have gotten out of poverty do not drop back by providing them some safety nets. But in terms of building the actual purchasing power, it would be a national program. But we can play a role to ensure that once you are out of it, then you are not pushed back because of things that would have otherwise been insured. The regulatory sandbox and the learning so far. Just like any new intervention, the lessons are slow. I cannot say as of now that we've had a very successful case, which I can able to talk about, that 1, 2, and this is where it is, these are the volumes, and etc, etc. But what I can say is that many, about 3, I think about 3, that have been in the sandbox are almost at the level of launching. But we have also established a partnership with Financial Sector Deepening Africa to see if we can get them partnership in form of seed capital to scale up their innovations. Because the challenge that I see with innovators is that, yes, they have ideas, but scaling them up requires money, which money they do not have. So we are trying to identify for them potential partners that can support them to scale up their innovations up to a level where Sanlam or Jubilee or whichever company. I also mentioned Sanlam because it's a
sponsor.
A sponsor, yes.
Let's clap, ladies and gentlemen. Let's clap.
Where they can take up the innovation. So yes, we want to encourage test. It is testing and learning. The process is slow, but we anticipate that with useful partners, we can have very productive deliverables from the sandbox. From Sharon, of smart applications, the NHIS. This is a whole complex debate. The debate has been so complex that I have even lost track of where we are. But what I can remember, the last I interacted with it, and why I'm saying I've lost track, because we are not leading. Politics has the way they do their things. It is the Ministry of Health leading, and therefore we are supporting. And why I'm saying we are supporting in the current framework, the Insurance Regulatory Authority of Uganda is not anywhere. The last I heard from it was that the NHIS will be a mandatory scheme, but if a certain individual and employer wanted their workers to have a superior cover, They will be required, first of all, fulfill the mandatory cover, then over and above, they go to the private sector. A position that we are strongly opposed to, because that would mean that the private sector is now secondary after they have had the other mandatory cover. Over and above, then the private sector would come through. But like I mentioned, it was put somewhere. Why it was halted, it was because of some of the disagreements that we have as key stakeholders. Maybe somebody will bring it up again, and we are strong as a regulator on the role of the private medical insurers, but also on the role of the Insurance Regulatory Authority. And our arguments are based on the experiences where there have been national health insurance schemes. I think from my young brother Kasule, it was a question to the brokers. And since I am not one, I will maybe ask the chairman of the Insurance Brokers Association to take on that shot. I thank you.
Thank you very much. One or two comments. One is that our tea break is ready. So I request that we cooperate. And we take about max 15 minutes. But it's also going to be a working tea. Pick your tea and come back so that we are able to jump into our panel, but also save time for the evening that is important to some of us, or if not many of us, as per the program. Solomon usually uses this statement that feedback is the breakfast for champions. Critical feedback. So Solomon, I've added that now. Critical feedback is the breakfast for champions. So as IBAO, we are asking for feedback. The 6th time we are putting up this conference. So I'm going to request everyone to jump into their emails. Kindly, as we go for the tea break, jump into your emails and be able to share with us feedback. I'm sure it will take you about a minute to really respond and let us know, so that once we come the 7th time, wherever we'll be in this country, we should be able to give or even finer conference. Before we go for our tea break, allow me to request our platinum sponsor, Sanlam, to come and appreciate Director Sunday Protasio. And Sanlam will be represented by the GM, the General Manager Commercial at Sanlam General, Ms. Deborah Mwesigwa. Please step up and come and appreciate Director Sunday for the remarks that he has shared this morning. Aiva, please get me the award for the director.
Thank you, MC. It's an honor to appreciate our director. Thank you very much for the in-depth research done. These things, we know them, the challenges, the threats. We've been talking about them outside, but I think we lack the courage to sit and approach them. Thank you for bringing all that in a closed environment, whereby we have to look at each other and ask ourselves, what next? What should we do? It is a wake-up call, and the research is very clear, thorough, and precise. The call is to us to respond. And from your sharing, to me, the key take-home points are, what do we need to do in this constant changing socio-economic and regulatory environment? What do we need to do? Are we sitting back to say we are defeated, or are we going to pop outside our boxes and get the job done if we need to keep afloat? Otherwise, we will go back to our homes and farms and retire. There is also need to strengthen our organization's competitive positioning and differentiating ourselves. How are we going to do that? This is in response to our strategies. Yesterday, one of the speakers mentioned about boardroom strategies. We need to cease or stop doing boardroom strategies. We need to first leverage on researches like this and then be able to draw strategies that are focused and are supposed to deliver results. Then it also speaks into the workforce, the dynamics in the workforce. We have changes in the workforce. Our speaker yesterday mentioned it from the academia world, that you can do anything to the employees, but when they've decided to move, they will move. Not that you're not giving them enough or you're not giving them benefits, but they need to move and go where they feel comfortable. And also the business operations. Are we still going to do business in the way we're doing it, or there is need or a call to change? And then also from your discussion, Director, you also mentioned the need to employ hybrid approaches. We need to stop doing business the conventional way. Yes, we cannot stop our nice, good things that we're doing, which is customer care, relationship management, interface with our clients, but what other more things are you going to bring on board that are going to keep the customer fixed to you? Technology was one of them. Innovation and creativity was also strong in your points. And also collaboration. He mentioned collaboration directly and indirectly. Guys, we need to collaborate even in the face of competition. Otherwise, we will find ourselves running a race that is only going to satisfy us and out of the industry. You can't be a lone winner. You have to work with a team. Collaboration has been re-echoed from all the speakers that were here yesterday and even today, so that we can be able to respond to the rapid changing needs of our clients and be able to not only serve them, but satisfactorily serve them. Thank you very much. The area I find still lukewarm and polished is the overregulation, but you have clarified it in your final speech to say that you are conducting a research, which we look forward to, and we will be glad to hear the response to this overregulation. You cannot be innovative, creative when you're in a box, when you're heavily being slapped left, right, and center. Thank you very much. We look forward to the responses from the regulator. I remain Deborah Sanlam General. Thank you.
Ladies and gentlemen, thank you very much for the first half of the morning. I am going to request that we use exactly 15 minutes, and I request that the CEO MUA, Mr. Latma Mukasa, together with our regional stakeholders, be the first of the line so that you come back here and we get a deep dive. For the rest of us, let's quickly agree that we'll use exactly 15 minutes and come back here, reconvene, and move to our next part of the discussion. Thank you very much. As we continue to move, CEO Jubilee Health, Mr. Dan Musime, we will have a conversation on the copay. I'm sure that you and Annette, we can be able to really harmonize that conversation. Thank you very much. Enjoy your breakfast. Let's make it a working one. Pick and come back. Thank you very much.
It's 7:30 p.m. and you're 65. And you've built quite the life. Now look back. More than a legacy, you want to build a path so that the generations to come may climb higher still. It's 7:30 p.m. and you're 65. And you've built quite the life. Now look back. More than a legacy, you want to build a path so that the generations to come may climb higher still.
The Insurance Brokers Association of Uganda presents the 6th Annual IBAU Conference 2024, themed Adapting to the Evolving Business Landscape, from April 17th to 19th at Mbale Resort Hotel. Prepare to learn from our guest of honor, Alhaji Ibrahim Kaduna Bilubega, our guest speakers, Frank Mola and Angela Nduge. This conference is proudly sponsored by Sanlam Uganda, Gold Sponsor, Silver Sponsor, Sapphire Sponsors, Bronze Sponsors and Copper Sponsors. For more information, visit www.ibau.ug or call 0772 918 542. Mbale, here we come.
Imagine you live lived your whole life in a single day. By breakfast, you'd be 18 and just finishing school. At mid-morning, you're 30 and hustling hard.
By lunch, you're 40. Maybe you have kids? Kids that
Your
want.
sneakers?
By 3 p.m., it's the big 5-0. The kids have moved out, and you say, freedom. Your parents say, we're moving in. I hope you planned for that. Before you know it, it's 8 o'clock. And hopefully, thanks to some smart investments, you can afford to put your feet up.
It's 9 a.m. and you're 30 and you've got questions. Lots. But remember, when you don't know the way, choose a guide who does.
It's 7:30 p.m. and you're 65 and you've built quite the life. Now look back. More than a legacy, you want to build a path so that the generations to come may climb higher still.
Life is full of uncertainties. GA Insurance plays a critical role in helping individuals and businesses manage life's uncertainties by providing financial protection against various risks and ensuring financial stability in the face of adversity.
All right, it's the exact time we agreed. I am going to request, ladies and gentlemen, that we assume our seats. And then once I see that we are set, I'll invite the lead moderator to come and take position. Can I request, ladies and gentlemen, those that are outside, especially not at the tea point, if you're finished already getting your tea, please come back inside so that we can be able to proceed. Thank you very much for complying as agreed. We need to move quickly so we can save more time for our engagements in the afternoon. So quickly, without wasting time, allow me to invite the CEO of MUA, who is also to represent UIA, to come as our lead moderator, Mr. Latimer Mukasa, to come to the stage. And after, he will have the panelists come as well. Can we welcome Mr. Latma Mukasa with a round of applause?
Thank you very much, MC. Obviously, as you can see, I didn't get the memo regarding the dress code. The previous two speakers are well decked. Now, Sundays, that is standard operating standard practice. But our MC, I don't know. I mean, last night he did speak a lot, and he complained about his voice, so he had to imbibe certain liquids, which give certain reactions the following morning. So to cover those reactions, he had to turn up smart in a suit, and so we look at the suit and not look at the eyes. Thank you very much. I was given two tasks today. I needed to give my views on Sunday's presentation. A lot has gone into that, so I'll be very, very brief. And then I'll invite the presidents of the associations from our East African partners to come and do a deep dive. Now, what did I pick from Sunday's presentation? It cannot be business as usual. It cannot be business as usual. Things have to change. We are living in a changing environment, and we really have to adjust our businesses accordingly. We do have internal factors, sometimes we're in control of, and then we do have external factors that actually impact on our business. And sometimes directly, sometimes indirectly, but something that's very topical, and most of you have been seeing on the news, is the war in the Middle East, which started with the war in Gaza, then Israel attacked the Iran embassy, Iran attacked Israel. This morning, Israel retaliated with missiles, and that cannot be good for business, but something caught my eye this morning. There was a clip showing the movement of aircrafts in the region, and all aircrafts are now diverting around Iran. None is overflying the Iranian airspace or even the Israeli airspace. What does that mean? It means that now aircrafts are having to travel further, and the airports are closed. So some of these kind of ripple effects, and if you remember the war in Ukraine, these kind of ripple effects come back and affect insurance. So when you hear something like Russia, Ukraine, they are fighting there, you must have known that the shipping became a problem. Shipping became more expensive. These things come back to affect us. We saw the floods in Dubai this week. Dubai, people who have been to Dubai know it hardly ever rains. But what are they doing? Playing with Mother Nature, seeding the clouds, and the clouds showed them. So you can imagine the number of claims coming out of that. So ladies and gentlemen, we cannot continue business as usual. Things have to change. Now, there was rethinking the business models. The brokerage industry I left 7 years ago is not the same brokerage industry of today, and things have to change. Bancassurance started about three years ago, and you can see from where I sit as an insurer, you can see that the broker space is being rattled, if I can use that word. There's another risk to the broker space, which may not be very obvious to the brokers, but insurers see it, is the emerging setting up of insurance networks on a global scale. Now, these networks come in, they will come in and fulfill all the legal requirements of placing cover, but what does that mean is the networks are taking the role of the brokers. And that is something you should be worried about. Senior executives who are now leaving the international brokers and so on are setting up networks which allow them to place businesses in multiple countries. So to the brokers, please think of that very, very seriously. Having made my comments, I was supposed to introduce myself. I am not going to go the route of talking about my brand. My brand is MUA Insurance, in blue and an orange star. I will stop there on my brand. But I will talk about myself in relation to the broking space, of which I was a part of for 16 years. I stand here with immense joy, happiness, pleasure to see the strides that the Insurance Brokers Association has made to get to where we are. Really fantastic. You need to clap for yourselves. I was chairman of the, at the time it was called Uganda Association of Insurance Brokers, before they changed the name. I believe it was 4 or 6 years, I can't remember. And it was during that time that I got an idea and said that we need to have regional collaboration. I did call my fellow chairman at the time and proposed to set up an East African Insurance Brokers Association. And I was pleasantly surprised by how all the countries embraced it. And we had a brokers conference here in Kampala, in Uganda, and we were at Protea Hotel, invited the then Minister of Finance, Maria Chiwanuka, who gladly graced the occasion, and that was the day East African Insurance Brokers Association was set up, with myself as the founding president. I cannot forget my colleagues at the time. I think in Kenya it was Mushemi Ndungu, who was here. Tanzania, Dr. Ndege, but was represented by Kamis Suleiman. You know, and Kamis Suleiman and my paths were sort of the same because he did attend that. He then went on to become an underwriter, I think, with Sanlam, and is now the chairman of the Tanzania Insurers Association. And I've been working with him over the last couple of years on cross-border issues. Rwanda, my brother JP, you were there, I remember. I think it must have been 2013. You can correct me if I'm wrong, but 2013. And Burundi, Abdu couldn't make it today, but I believe he's represented. And then we then signed the original document. As a new organization, there were, you know, we would fall down, get up, fall down, get up. But to see that the East African Insurance Brokers Association is now up and running, strong. You're branding, you have T-shirts, you have money in the bank. Well done, ladies and gentlemen. That's really, really good. So my next role today is to invite the presidents of the East African countries. Anthony Mwangi, please join us on stage. Anthony Mwangi is the chairman, president of the Kenya AIBK, correct? Association of Insurance Brokers of Kenya. You're welcome, Anthony. Olo Benson Okoth from Tanzania, please join us. Paul Muhammad, please join us. And there's a reason why I've left Mendes for the last. Me and Mendes have history. A long, long time ago. As you all know, Mendes is from Zimbabwe. So there was a time when I was a broker and I needed someone, I needed to recruit somebody to come and provide the technical capacity, basically a good person. A Zimbabwean friend of mine recommended Mendes, and I contacted her. She was willing to have a chat. And I cannot forget that evening in the hotel in Johannesburg where Mendes came and we had a discussion. Basically, it was an interview. And Mendes then joined us. At the time, it was Rock Insurance. And then she moved on to another company, then moved to Tanzania, to Rwanda. So I've really been happily following Mendes' progress, which has been very good, very, very impressive. And right now, Mendes is the president of the East African Insurance Brokers Association, something I founded. Well done, Mendes. Please join us. Please join us. Oh, she even got a husband from Uganda, so she was reminding me yesterday that Labola, now in Southern Africa, Labola is bride price. So here in Uganda, the husband needs to bring me my chicken and not KFC. It has to be cows, eh? Not chicken. You're worth cows, eh? Very good, very good. So, ladies and gentlemen, you're most welcome. And my most sincere apologies. I missed, yes, Willie Gatore, please. Willie is from Burundi and is representing Abdu Ruchekeri. Please, you're most welcome. When I turned, I saw an empty seat, and I was wondering why do we have more empty seats, but you're most welcome, and my sincere apologies. Yeah. Good. So as we do a deep dive, ladies and gentlemen, I'll start with Paul. Same question to all of you. But Paul, we may know, but our colleagues don't know, and one of the reasons we're here is to benchmark. Just give us a high-level summary from where you sit, of what your market conditions are like, and what strides the sector has made over the last 12 months. Over to you, Paul.
Thank you, Latima. Greetings, everybody. I hope I'm audible enough.
Yep.
Yes. So Uganda, if you go by GDP figures, you'll be hearing plus minus about 55 billion US dollars. But when you break that down, you'll see about 50% is services, about 24% is agriculture, and the balance more of industry. What that shows you is that services is taking a bigger share, and there's a lot of work to do in that regard. Though you'll find our population is mostly around agriculture. And with all the land we've got, it's an area that is a little underfunded. What we've seen is, as a country, when you look at the market conditions, things like limited access to financing, things like the capacity of our institutions, outdated technology, those are areas within which we can work in. Now the question comes, what has insurance done in supporting the industry properly over the last 12 months? Well, in terms of economic or capital injection into the economy, we've got VAT that plays a role in there. Right now there are discussions between IRA, URA, with regards to the marine portal to ensure that we reduce the outflow of money going out, for example, through CIF, and try to have all these insured locally. And that way, even with the VAT, and whenever you have losses, you can be able to check that these have happened in Uganda and go to a local insurer or broker. And you'll find Uganda has made strides in innovation, led by our IRA. Also opened up the Innovation Awards, which is to encourage members, brokers, insurers, to think outside the box for ways within which we can get closer to our clients and the insuring public. Because if you're not careful, insurance has been a traditional product being sold over the years the same way. And more than anything else, it's to embrace technology. We've also worked quite well with ITC, which is the arm that trains our industry and training them to be more professional and be able to engage and provide the right quality of products to our clients. So without saying too much and giving more room for my members, at the end of the day, what has been a continuing rule for us as the insurance industry is on awareness. We still have quite a bit of work to do with the awareness. We've seen the regulator try to go opening up regionally and come up with programs to move around. In our little way as IBAO, we're also saying we can't concentrate in Kampala only. Let's try to have an idea and see what we can do in different areas as we get to appreciate the country better. Thank you.
Okay. Thank you very much, Paul. And later on, I'll come back to you, and perhaps you can also put it to your members on innovation and also addressing the challenges. The challenges are known. We know, the bank assurance, the awareness that you've touched on, and market practice, and all those things. You perhaps give, as a parting shot, you'll give a bit more enlightenment on that. Okay, great. Thank you very much, Paul. Can I move on to Mr. Okoth from Tanzania? Same question, Mr. Okoth. Just kindly give us a high-level summary of what the market conditions are like for insurance brokers in Tanzania. Tanzania, I think that's the correct pronunciation. You know, in Uganda we pronounce it Tanzania, but in Tanzania they pronounce it Tanzania. Is that correct? Yes, Tanzania. And what strides has the sector made over the last 12 months? Over to you.
Thank you very much for that question running across. Probably I'll start from where Paul has left, that the IRA in Uganda is, moving regional. That has been done in Tanzania, so it's cutting across. We are trying to benchmark to show you that what Uganda is doing, either Kenya or Tanzania is doing it. So we've moved in the zonals because Tanzania is so huge. That is one. But again, what have we made in the last, let's say, 12 months? The landscape, the business environment has changed significantly. And just a few of the things we are talking about, I think the regulator was speaking about is universal health insurance. The president signed it, High Excellency Suluhu Hassan, and the task was given to TIRA, Tanzania Insurance Regulatory Authority, to oversee the implementation of the same. So first of the strides or moves which TIRA took is to regulate the service providers, the health facilities, and they are now being part of registrants of the regulator. It's a very huge task. So it is work in progress, because we believe if you are going to service the insurance customers or clients, then you must meet some of the basic requirements of insurance. Another area where we've moved so fast is formation of various consortia or pooling together of risks. In Tanzania we have, in the energy sector, we have oil and gas, and the risks are very huge in terms of exploration, drilling, and all that. So some consortia has come up, like oil and gas consortium, where underwriters come together and sign which portion will they take. So this is happening in your neighbors. We also have agricultural consortium, and what TIBA, or Tanzania Insurance Broker Association, is doing is to lobby so that brokers are part and parcel of this consortium. I'll run through them very fast. That is the second one. The third one is opening up space for insurance digital platforms. We are accustomed or used to traditional distribution channels like agents, brokers, but with the coming in of bancassurance and also other outlets, the regulators opened the window for the platform in terms of digital, so that you can push insurance through those. I believe here in Uganda, same is happening. But also we have got registration of service providers, like garages. You cannot attend to a customer's car if you are not registered. These are some of the basic trends which we've achieved in the last few years of the vibrancy in that market. Yeah.
Okay. Fantastic. Thank you very much, Benson. I can actually speak to the consortium, especially the oil and gas. And just to share with you, Uganda already set up the oil and gas consortium. And something happened. When we're negotiating the insurance for the pipeline, And as you know, the longest part of the pipeline is in Tanzania.
Yeah.
So the principal, in a sense, played us. Came to us, we negotiated tough, then came to Tanzania and then negotiated a better deal, then came back to us. Better deal for them, not for the insurers. Came back to us, and what we discovered is that we lost $4 million in premiums. So I did tell my colleagues at the Uganda Insurance Association that time to engage our colleagues in Tanzania. We arranged a visit. I think I've done a couple of visits to Dar es Salaam, and the welcoming was very warm and taking in the ideas. We shared all our documentation, even with the regulator. And some months after that, when your regulator, Dr. Sakware, came to Uganda to visit the oil fields, I asked him, how is it going? So he told me, we took your consortium,
yes,
and we improved it.
Yes.
And which was very good, because obviously your risks are a lot higher. I think you have the LNG risk in southern Tanzania, which is huge. That's
Very
quite
big,
massive.
yeah.
Yeah. So collaboration is good. I think that's where you started. And these things, we help, several countries help each other. Thank you very much. Anthony, over to you. Same question, just a high-level summary, and what the market conditions are like, and what strides the sector has made in the last 12 months.
Good. Thank you, Ratma. Perhaps for me, let me start by once again this year congratulating IBAO for a very well organized conference. From Kenya, we take a lot of pride when we see what is happening in the region, because the job that you started, Ari, with Moshemi and a few others, we also as an association has bathed all these conferences.
Yes.
And supported. So when we see you growing from stride to stride, I think we really encouraged. Now, quite a number of similarities with various markets in Uganda and Tanzania, particularly on the areas of health. The only difference is that whereas your regulators in your respective countries, I think, have a role or some say in the national insurance, although I think Uganda, the regulator, basically said they are not involved, but at least they have put in their comments. In Kenya, it's total reverse. We already have a date set when the universal health coverage will start. I think deductions will start, I think, in 1st of July. So we have already moved forward, ahead, without input of the private insurers or even RA, to the best of my knowledge. So we already moved on and even set the date when deductions will commence. The effect that you have on the medical coverage is still out there for, we are not yet sure exactly the effect that it will have, but we expect the purchasing power of most people, because it is the employees that will be deducted. So we are waiting to see exactly what effect that you will have. There is a new law that came through our Finance Act, the current one, that has completely, I think you use the word rattled. For us, I think it's a complete revolution of how perhaps we are going to do business going forward, called e-teams. Every single business in Kenya, at whatever level, even the micro level, are supposed to issue compliant invoices through KRA. And that has completely changed the scenario of how we do business in the country. We are now not allowed to issue direct invoices, or what we call debit note, to our insurance company, our clients. Debit notes now can only come from insurance companies, and we invoice for our commission to the underwriters. And that has had a huge impact. It is starting this month, so we are not fully sure the full implications of it. We have petitioned government, but perhaps RA was saying here, government is always very, very slow. So we haven't had a response as of now, but the matter is with government. The other thing that has also changed is that now for us microinsurance is separately regulated. There are now rules on microinsurance. We have now even specific, we have had the first microinsurance underwriter now registered, dealing now with the BOPs, as it were. So that is quite a bit of change that has happened. There are quite a number of other several issues. We have a court ruling, as all of you know, that I think in all the East African countries, I think we are the most litigious people. There is a limit under policy limits for passages of 3 million under cover for passengers in our motor vehicles. That limit has been removed by court through a court judgment. So currently, as we speak, we don't have a limit of how much somebody can be charged, any incurred damages in court, and that is a very, very serious issue because it means that nobody now is fully covered in the Republic of Kenya. This is an issue that last week we pushed a delegation to the Finance Treasury, our CS, Cabinet Secretary, and brought those issues. So there is now a task force that is looking at some of those issues. We want to peer review with what is happening in South Africa, because then it means our third-party limits are now not working, and there is no insurer who can basically work without a limit. So there is quite a bit of that in the market. The other big, perhaps, issue that I would also say is that in claims, we now have what we call small claims courts that are able to deal with claims of $10,000 and minimum. So any claim now that is below $10,000, we have a specific court called a small claims court that has been established at the judiciary that is supposed to deal with those matters. And they have 60 days within which to be able to render their judgment. So those are some of the few things that basically that we are doing. There are many more, particularly from a regulatory point of view. We are now a little bit more regulated. Brokers in Kenya, before you get your license, you must, because even if cash and carry is still there, but you must be able to have a clearance letter from all the insurance companies that you do business with, that you are fully compliant in terms of payment of premiums for you to get your renewal license. So those are some of the few basic things that are happening in our market. There are much more than that, but in the interest of time, I think those are the ones I want to highlight for now.
Great. Thank you very much, Anthony. I'll just pick up on the e-teams issuing of compliant invoices through KRA. Brace yourself. Currently, what's going on here in Uganda is there's a traders' strike because ours was introduced, was it early this year? IFRIS, we call it Electronic Fiscal Invoicing and Receipting System, something like that. So it was okay for, insurers, we had to do it, and now it then went down to the semi-formal and informal businesses. And now when the Uganda Revenue Authority came in to enforce, then all hell broke loose. So as we speak now, the whole of downtown in Kampala, shops are closed. They're on strike. So brace yourself. Hopefully it will be much better in Kenya. Great. Thank you very much for that. Let me move on to Mendis. Yeah, same.
Good morning. From the Rwanda market, we've had some changes in the number of insurers that are licensed. In particular, we have a new captive insurance company. That's the Defense Captive Insurance Company. This is a break off from the MMI, who handle the insurance for the army, and police, all those in the service sector, that's special forces. Then we also have a mutual company, Ubuzima Bwiza, which was started by 8 beekeepers, whose main aim was to provide health coverage for their children. So now it's a growing mutual company. We also have a disruptor that has recently entered the market by the name Eden Care, providing digital medical insurance where papers have been completely removed from the process. Now, as Rwanda, we've had the conversation this morning from Mr. Sunday, especially with issues of people living from hand to mouth. So the government of Rwanda implemented a strategy, the National Financial Education Strategy, whose aim was at increasing the level of financial literacy for Rwandans. And then it is being led by Minicofin, that is the Ministry of Finance, and with active engagement from the National Bank of Rwanda. Through that strategy, we now have a financial inclusion department from the regulator, which is working for both the banks and the insurers. And from that financial inclusion, we now have a working group that is meant to push financial wellness for all Rwandans. And brokers have been invited as an association, the insurers have been invited, and various associations from different sectors. So we're trying to drive financial education and financial inclusion and how to spend your money. Even the low income needs to know how to budget. So the whole idea is to reduce the hand-to-mouth syndrome and the amount of borrowing. We also had the introduction of the sandbox regulation, permitting the introduction of innovative insurance products to the market within the set regulatory parameters. We actually have, I think, Britain that have just recently launched their product this year. I think it was initially being through the sandbox. It's still a new product, so we cannot measure the success as yet. It's called Ramba, a micro insurance product. We also had a change in the micro insurance regulation because we had only one insurer that had registered as a micro insurer, which is Radiant Yachu. But now insurers have been resisting going into that space. So now the regulator has allowed insurers to be able to offer micro insurance. So there are currently 5 insurers offering micro insurance products. We also have the Financial Service Consumer Protection Guideline that is now being implemented. And key takeaways from that regulation is the need for transparency. One, all insurers are mandated to issue a key fact statement that gives a summary of the cover. All insurers, brokers are mandated to educate their clients on the product that is being issued. Insurers are not allowed to sell unsuitable products, so you cannot just push. So if there are complaints about sales of unsuitable products from clients, like the conversations that we've had this morning, then you can be taken to task. Under the consumer guidelines as well, the regulator has a chatbot called Intumwa, where you can actually register your complaints. And I think all insurers now have chatbots that require you to handle complaints. All companies are supposed to have whenever you sell a policy, you also give the clients the complaints handling procedure. Also, amongst the conversation is transparency. The banks have already implemented the Kererenya, which is a website that allows consumers of financial services to compare costs of different banks. Now the conversation is with the insurance companies. I don't know how that will work since we are providing it on a risk basis. So probably all insurers will put the minimum rates on their website. Then, of course, something that has also come out is the data protection guidelines. I know that the Rwanda one is, I think, ahead of all of us, but the implication is every company has to have an appointed dedicated resource for data protection, and the deadline for registering as data controllers, all service providers that receive any form of data and collect data from personal data from clients are supposed to register as data controllers. And then we have new regulation on big risk underwriting, that brokers should be represented on the technical committee for any big risks. Then a recent development are the reinsurance guidelines, where 50%, this affects insurers, 50% of your GWP is supposed to be retained. And then no reinsurer can have more than 50% of the insurer's book, and all placements should be done before commencement of cover. So we are seeing stricter regulations and a lot of drive towards domestication. And of course, what has also been pushing our penetration levels is the introduction of Ejoheza, where the government has issued through, again, RSSB. We now have 2 million subscribers on pension and funeral. This is a microinsurance product. For the low income, the government actually subsidizes. Whatever you pay in towards the pension, they match what you have paid in. So that is to try and drive a savings culture. And in addition, you are given a life policy that includes a funeral benefit. So we have a lot of developments happening in Rwanda. There are too many to mention, but these are just a few. Thank you.
Wow, that's quite a lot going on in Rwanda. Thank you very much, Mendis. Interesting about the captive defense insurance company. I think there's at least one parastatal in Uganda trying to make the same sort of moves. We are waiting to see how that pans out. Will they allow a broker?
Unfortunately, they are not working with any brokers, and the insurers, we expect some insurers are going to lose the business that they have.
Correct. Then the technical skills, where do we, assessing the nature of the risk and all that?
Well, they do have the necessary resources. Some have come from the insurance companies, but there is a lot of training going on, and new regulations. Even the principal officer for the defense, for the captive, is supposed to have insurance qualifications. So we have deadlines for insurance qualifications for all sectors, even including the government-run institutions.
Good. Thank you very much. Willie, over to you.
Thank you. I first want to congratulate ABAO for the organizing conference and what have been done so far. So the underlying situation in Burundi is that the first insurance company started in 1977. And up to now, we have 15 insurance companies. While insurance brokers started in 2007, and actually we have 54 insurance brokers. So you see that there is a big difference. In 2016, insurance expenses were $1 per year per person, while in 2020 we jumped to $2, and actually we spend $3 expenses in insurance. The main challenges we are facing is the regulator and insurance companies, which looks on broker as competitors, not as helpers to access to the market. we have a surviving economy while others have an evolving economy. So that is we lack special education in explaining the role of insurance to people, as we have more than 95% of our people who are under $1 per day for living. So this shows that the penetration rate, which is very low, 0.8, but we are trying to evolve smoothly but surely. The main change in 2023 is that there was a school of insurance which comes to help build capacities of insurers and brokers, a 2 years studies with at the end a certificate. That's the main thing we have come up in 2023. Thank you.
Okay, good. Thank you very much. I think increased collaboration is key to ensure that all the countries also move at the same level. Before I move on, allow me to recognize, I think we do have some loss adjusters in the house. Can you wave? Anyone from an assessor loss adjusting? Good. We have some of them in the house, and really thank you so much for being part of us. They are obviously a very critical part of the entire insurance value chain. So we thank them for being with us, but also in terms of collaboration with key loss adjusters across the borders. That's also a key thing. So that's something that must certainly happen. If we quickly go back to the next point, I think most of you have raised all the challenges and what has been happening in your respective markets. Impact on economic development and any specific examples. Like Paul, I think you mentioned about innovation, but generally, what is the impact of what's happening on the economic development of the country, and what examples would you have, specific examples? Microphone.
Yeah. Thank you. When you look at the impact of insurance in the country, it's broken up. Earlier on, I shared about the economic impact and the contribution to GDP, which was from VAT, what we're trying to achieve with the marine portal and all. And then you've also got the traditional insurance policies that mean go for welfare of our people. For example, workers' compensation and the TPS. But what we are seeing a lot happening in Uganda is the sensitization. Nothing beats creating a lot more awareness and sensitization for as many people as possible to take on cover. We've seen the microinsurance come on board. For example, what IO is doing and what they're doing through telecoms to get as many people as possible have a little cover. One of the things that the banks, with bank assurance, that has helped is while insurance companies, brokers, and agents are limited by where they can operate, through bank assurance, they have been able to open up and get further in using their distribution channels and be able to access a lot more customers, hence boosting the economy through all that. As more people take on insurance, also employment comes into effect, and we're able to have more people come into insurance. And as more people come into insurance, the ITC is also there to support in training these people to be able to sell the right insurance products, come up with the right solutions for the economy, for the people in the economy. Thank you.
Okay, thank you very much, Paul. Benson, impact on economic development and any examples that you may have.
Yeah, it goes without saying that insurance is very critical in terms of economic development of any given country. Particularly in Tanzania, I'll say that insurance removes that fear of investors that, okay, when we invest, then our businesses are protected. The big challenge we have is that our economies, or the kind of investments which would want to attract to the country, are so huge so that even the local capacity might not be able to take that. We just spoken of energy sector, oil and gas. You know, the project is so big, and when you approach some of the underwriters in the market,